There goes the bell. That means the markets have come to a close right here at the bows. And joining us to help us with the numbers is Linda Kiraithe, who is a research analyst at EABL Access Africa. Many thanks for joining us here, Linda.
Thank you for having me on the show today.
Excellent. Now, you know, I must indeed start by asking a general question. What has been your observation as an analyst through this year? Yes, January to Feb. But of course, having a look back at the year, how 2020 was quite a hit, unprecedented as many have said. So what would be your comment from the start of the year? How has this been?
I'd say 2021 has been so far a good year.
Okay.
We have seen continued recovery in terms of the general economy, in the global markets and even locally. And this is anticipated to hold actually for the rest of the year. With the onset of the vaccination, with the discovery of the COVID vaccine, we expect that investor sentiments are expected to continue to improve as we go on. We expect to see continued reopenings of economies. Of course, there are jitters around new strains of the virus, but we all hope and believe that things will continue to improve just as we have seen for the past 1 month.
You're very right, especially when it comes to matters the vaccine, because we've seen how it has excited people that, you know, there's at least hope at the end of it all. Speaking of which, by the way, Kenya, I think in the next few weeks, we're also expecting to have some jabs, is it?
Yeah, sure.
So that means locally as well, we'll be at least having some hopes, especially in the markets. Let me just jump in right now to matters international investors as well. What has been your observations? Is there some heightened activity now that there's all this hope that we see?
The global markets have been on a good path to recovery. We have seen continued interest in tech stocks, which last year we saw are what most of the investors looked into. And quite interesting has been the uptick in activity by retail investors on the Reddit platforms. You have seen what happens with GameStop. And the hope is that retail investors will continue to have interest in the markets so that the markets continue to come up.
That's interesting too. It's an interesting observation that a lot of retailers are also coming in.
Yeah, sure.
And we surely hope to also encourage them to listen. Keep on coming on.
We also hope it comes into the local market also.
Yeah,
yes,
absolutely.
Yeah.
You know, I just recently have been following some of the headlines in some of our business outlets, and there's a lot of conversation about the oil prices and what's happening. And so my question would be, is there something as well that you are observing from your end when it comes to matters oil? And of course, I wouldn't want you to miss out on also talking about the dollar, because of course the oil and the dollar somehow dictate a lot of things when it comes to matters economy. What has been your observation so far?
So we have seen oil prices come up, driven by expectation of demand. As the economies open up, we expect to see a lot of activity in manufacturing, in tourism, in transport industries, something that has not been happening in the year 2020. We saw most of the economies remain closed for most of the year. And I think the demand that is expected to come up is what is expected to continue to drive up the oil prices. This is also going to be pushed also by suppliers holding on to the barrels that they already have in anticipation that as the demand comes up, they'll be able to sell it at better prices. So oil prices will continue to go up definitely. And unfortunately, given that we are a huge importer of oil, this will expected to continue to affect our shilling, which has not been performing so well. So the dollar is expected to be quite expensive for us. And looking also into the fact that we expect to see a bit of inflation from the fact that there's an La Nina expected to come, so drought, higher food prices, and actually the expectation is that we might see lower double digits on the inflation going into half year and the middle of the year from May onwards, which is quite detrimental to us, definitely.
Looks like it's tough times ahead, is it?
In terms of the currency, yes. CBK has been quite supportive in terms of trying to manage the currency versus the dollar. Not really so much activity versus other international currencies, but more specifically on the dollar, because our imports are mostly dollar denominated, and the fact that most of our debt also is dollar denominated. I think those are very interesting sentiments there, Linda. Let's get into the markets now here, and we look at the indices. There's a little bit of a positive, because all along when I look at the all share index,
When I look at the 20-share index, when I look at the 25-share index, all of them are on a rise. It's on a positive. We don't have a negative like we have had the previous weeks before. What is your observation on this? Is it as a result as well of the same thing that we are talking about, activity in the market?
Yes. We expect to see more investors coming into the market. Investor confidence is continuing to build up on an expectation of a general economy recovery.
Yeah.
So we expect to see these indices continue to come up as we go more into the year.
Great.
And of course, this has been, if you look at like for the NSE 20, if you look at how Safaricom has performed so far, which has really pushed the indices up. If you look at the banks, which have been slightly up also this year. So for this, we expect that the market will continue to come up as activity increases.
All right, thanks for that. Let's talk about some of our top gainers. Then you can see amongst the top 5 we have banks. You can see Stanbic Bank Holdings taking the lead. Then we have BK Group. We also have KCB and APSA amongst the top gainers. What's happening to the banks? Looks like there's some good news.
Next month, in March, banks are expected to release their FY20 earnings.
Yeah.
So, of course, there's some anticipation of some profit-taking through dividends by investors. However, I would not say that it's really 100% positive, just a speculative move, because we have seen some of these banks also issue profit warnings.
Okay.
So, I think the fact that investors expect that some of these banks will pay dividend, which, if you remember, CBK had said that they are the ones to approve the dividend payment, depending on the capital position of these banks.
Okay.
So just some speculative profit-taking actions by investors.
Amongst the top gainers is EABL. What's your comment on this? I know there's been a little bit of a setback way back because of the lockdowns, but I think we are seeing some ease of them so far. What's your comment on this? Is because of this that we're seeing?
If you look at the EABL's first half 21 earnings, you'll see there has been significant improvement half on half. That is in comparison to the year between January to June 2020 and June to December 2020. So there has been significant improvement in terms of the numbers.
Okay.
And I think this is what has improved the investor sentiment and the confidence that they have in breweries.
Okay.
And this is a counter that I would say is always affected by the economy. So when things are good, EABL will always shine. When things are bad, EABL will be among the counters that suffer the most.
It's also a counter that is affected by the taxman a lot, right?
Yes, sure.
Oh my. Let's get to the losers now. I see quite some interesting names here. I can see the Nation Media Group. I can also see Housing Finance as well, amongst others. I don't know, maybe you could start by talking about Matters Housing, because interesting enough, I see Housing Finance here, yet there was some very interesting news that we saw, some merger, I think it was with Britain.
Yeah.
What is happening now?
For HF, they had capital issues. So they had issues with the regulator. Their capital position was not significant and they needed some buffers. So that's when Britain came in and gave them $1 billion to boost their capital position.
Okay.
However, I feel that despite them saying that they will be using part of this money to move from real estate to SME and retail banking, I feel that the fact that the economy is not really so friendly, the economy is still on a slowdown, and recovery may take some time, is why investors do not feel so confident about HF, despite the fact that they got the capital that they wanted.
Okay.
Yeah.
Thanks for that. I think I want to end by, I can see one of the top losers is Nation Media Group. Your comment on that?
This is just, I would say that's just a factor of demand and supply.
Okay.
For the longest time, Nation Media has not been doing so well in terms of their financials, in terms of management strategy, and that is why investors have been feeling not so confident in taking up the stock. So these are just forces of demand and supply.
All right.
No new news.
No new news. All righty. Linda Kiraitha there, research analyst, AIB Axis Africa. She's not yet done, because right after this, we're getting to Markets 101. All right, on Markets 101 today, we get to learn the difference between M1 and M2. Those are terms that are used in the markets, and Linda is going to tell us where do we even use them. Linda, over to you. What is the difference between those two terms? So
M1 and M2 are terms used to describe the money supply. That is the amount of liquidity and money that is in circulation in an economy. So M1 is, I would say, the most liquid. That is the money we have in terms of coins, currencies, demand deposits. That is, the demand deposits are money that you can just walk into a bank, request for your deposit, and you get your deposit. So M1 is basically, I would say, what the amount of money we use on a day-to-day basis for our daily purchases, for expenses, for short-term investments.
Okay.
That is what you would refer to M1.
All right.
So M2 is M1 plus what I would say long-term deposits. That is money that you cannot access as in an instant, money that you would take time. So money held in fixed deposits, in long-term deposits is what now you would call, plus now the M1 is what you would call M2.
All right. Quite some terms there, and I hope you've learned something about M1, M2. If anyone mentions them out there, now you're a little wiser than you were before. Now, time now for my favorite part, which is the questions that you've sent to us. All right, first of all, to thank you all for the questions that you send, and to also encourage you to keep sending them. And so our question today is, provide a definition of what a working capital is. Provide a definition of what a working capital is. Over to you, Linda, for that question.
So working capital, from the word working capital, there's working. That is a continuous activity.
Yeah.
So working capital is the current assets minus the current liabilities. So in a business,
Current assets minus the
current liabilities.
liabilities. Okay.
So the current assets are assets that you can access easily. So in terms of inventory, cash, current liabilities are also short-term, I would say short-term debts. So short-term loans, maybe an overdraft, basically that. So current assets minus current liabilities is what gives you the working capital of the business.
It's actually a loaded question. I thought it was actually very simple, but it has some mathematics to it. Thanks so much for that question. Keep sending them on. So we're about to close the session, but we get to our historical fact of the week. All right, that's it from us right here on the Trading Bell Show. Hoping that you learned a lot of things, especially on the first part of the interview on matters derivatives. Always get to know that learning is never an ending journey. And so you can always keep learning 1 or 2, 3 things here, right here on the market. And here on the Trading Bell Show, we'll keep you informed as well on the latest news that come along with what is happening in the markets industry. Thank you so much, Linda, for coming.
Most welcome.
Great. So from us right here is to ask you to keep in touch with us, of course, on the social media handles appearing at the bottom end of your screen. We always want to hear from you and love it when you speak to us. That's it from here. See you next week, same time. Bye-bye.